Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Fiona Reynolds from the Principles of Responsible Investment. Hi Fiona.
Hi.
So I've just heard your extremely interesting chat at the Morningstar Investment Conference in Europe about ESG. And I have to ask, why should investors care about responsible investing?
Well, basically, a lot of investors, such as pension funds, for example, are investing our pension fund money. And so when they're doing that, they're investing of a time horizon of about 100 years. Liabilities for people in the pension fund pots who are 20, 30, 40, 50, 60, and they're going to be in that fund for 50, 60, 70 years. And so you can't just think about what's happening today when you're investing for the long term. You have to think about the issues that will be affecting that fund and those investments over a long period. And environmental, social and governance factors are risks. They're not more important than other risks, but you can't ignore them because they affect your investments. They're material risks, they're financial risks, and they've got to be considered.
I think one of the big misconceptions about this space is that ESG investing is ethical investing, and people say, well, there's only limited returns I can get from solar panels, for example. But the list that you gave just now of what ESG issues are fascinating. The GSK scandal, the BP scandal, the Volkswagen scandal, things that hit the bottom line, hit the shareholder.
Absolutely. I think one of the problems in responsible investment and about ESG is that there is a lot of confusion around the language and what it means. We work with investors, some of the biggest, most sophisticated investment managers and asset owners in the world. And this isn't about ethics. This is about risk and how you manage risk. Now, a lot of ethical issues end up being investment issues as well. So they're not mutually exclusive, but we come at it from that point of view, from a very much a risk management point of view. And it all comes back to how companies think about issues, how they manage environmental issues, how they manage social issues, how they manage governance issues, how they look after their staff. Do they go and pollute rivers to be able to get rid of waste? All of these kinds of things. They're all governance issues. It's all about how you as a company manage your business, thinking about the long term and how you're going to create value for me over the long term as an investor. And as investors, I think there's a bigger role to play than just sitting back passively and letting companies do what they like. We need to be engaged with companies, understanding their businesses, understanding what they're doing, and expecting them to change with the times and expecting them to think about risk over a long time period, and then we'll invest with them for the long term.
And it's not just about the fact that, to be honest, we all should be caring about our planet. Global issues are human issues. It's also about the pound in our pocket, because these scandals hit the share price instantaneously, don't they? But the longer term ESG issues affects a business's profitability over the long term.
Absolutely. If you look at the scandals recently, things like Volkswagen, that's hit their share price. And that was a failure of governance. That was someone, at the top undertaking actions that were illegal. And, with others having knowledge of it, it's a governance scandal. But it's not just therefore wrong, it is also affecting the share price. Then there's things like the BP Deepwater Horizon disaster, which is more of an environmental issue, but it was also a governance issue, and it also hits the share price. There's the issues that have happened in the Lonmin mines in South Africa. That's an S issue. It's about staff, about employees. But that ended up in, shootings and people dying. And that is a big social issue, but it also hit the bottom line of that company and cost investors money. That's why these issues are really, really important. Now, if we can do things as investors to improve the way companies perform, can improve how employees are treated, can improve environmental outcomes, it's a fantastic win-win for everyone. So I'm not sure why we wouldn't all do it.
Fiona, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.